back in the studio this week. It's been a couple of weeks since we spoke. Let's give a quick wrap up. Last week finished reasonably well. I mean, COVID numbers aren't any good, but markets are moving. Markets are pricing things in, and look, there's no sense of doom and gloom as perhaps there has been the last 6 months.
Well, true, and I've got to say across Aussie equities, we had a nice run up last week. It was very strong. Maybe that correlation between it and Wall Street is a little fractured. US was sold off. It was very much a topsy-turvy week for US equities. Ended on a sour note Friday or Saturday morning here. And it'll be, let's see what happens this week. You've got Thanksgiving and you've got the big Black Friday retail sales. So,
and God knows the retailers need a bit of a break, right? So it'd be nice to see a boost go to a non-Amazon player.
Well, it would be, absolutely. I don't know whether that's going to happen. Bezos, and I think he's closing in on $200 billion fortune. So he might get there this week.
Mate, he'll be funding Santa this year. I think his elves driving the output that fill the sleigh.
Yeah, exactly. It's just incredible, isn't it? So what happens? We've got a little bit of data coming out this week. We've got a good cross section across Aussie, and of course, what's happening with Euro and US, of course.
Well, let's dive in there. In the US, it's a tough time to be there. I mean, COVID numbers are racing up, so we've got this kind of this vaccine versus this lockdown euphoria happening. Sure. There's no winner. But I think, what we're really looking for is some leadership.
Well, yes, 200,000, just on 198,000 on Friday, 136 on Saturday, 1,000 people contracting coronavirus. You've got a vaccine that's at warp speed. I saw something earlier this morning on TV at about 5 a.m. that they're going to roll it out within the next month or so. So it needs to, you've got huge numbers in ICU units, massive numbers in hospitalisations, and
so we've got an overload or an overwhelming proportion of people looking to load up the health system, which is not good. Not
good in the States. It's on ventilators, I think the highest number yet. So it's a very tragic case, and I don't know whether masks and lockdown, we can say what we like about the Andrews government and Victoria, and I'm not here on a political beat, but when you think about where we are now.
Here in Australia, we're pretty low numbers.
We're incredibly low, and
borders are reopening.
Yeah. Whereas in the States you're at 200,000 for the day. What does that do? Europe's numbers, and they've really locked down hard in France.
And they're coming down?
Yep, massively, from 87,000 on the 7th of November all the way through to about 20,000, 18,000 on Saturday. The issue the lens I look at is what's happening to the growth of the economy, where are the key drivers, and what's going to happen as far as that manufacturing and, of course, Q4 growth.
Well, manufacturing is going to be critical to a lot of countries. As they bring back employment, they try to produce some local product and then perhaps even start to trade again globally. Yeah. I mean, we saw a trade deal announced last week here in Australia, which arguably is not a bad step, to repatching or patching some of our relationships in the Southeast Asian sort of region.
Yeah, absolutely. And we need trade. We're in that. Right in the centre of it, and from a geography and from a trading mindset, possibly it'd be nice to get some manufacturing back on board here, but let's wait and see.
We'll see if we can get there.
Yeah,
we've got plenty of resources to power the battery output, so
we sure have.
Maybe we can build something.
It'd be nice if we could, but that's another subject altogether. Maybe that's for a special later in the year.
Mate, let's talk about the conflicting narratives. I mean, we talk about vaccine euphoria, we talk about lockdown reality, we're talking about paths to recovery. Europe, Brexit deal, getting there?
Yeah, three main things to think about as far as the competition. You've got the policing of it, and of course what's happening with the fisheries. The negotiators have worked tirelessly to get to this point. And we're nearly ready. Now it's the politicians' turn. So it's Boris and his team. It's in their court. And Boris has got to either play hardball and say, right, I'm going to make this happen, or do we not get it done? And it's been just an ongoing saga. Does it not completed this week, and for the November timeframe, and then it rolls into the last month, which is December. I think you've been disappointed so many times. If you're a bride, you'd be absolutely crying. There's no way have you got to that altar. He just hasn't turned up.
Pete, talk to me about safe havens. I mean, are there safe havens out there? Where is the money flowing? We spoke about equities a little while ago, just in terms of are they fully priced in for the year? Are they still trading? Let's talk about currencies. Where's the money flowing?
Well, if you're looking at, from a currency perspective, it's been a race to the bottom from bonds. So everyone's now at the point of nearly zero or negative interest rates. Who could have believed it? So that yen, that powerful source that everyone had, the yen was a flavour of trade for so many decades as far as the retail trader, or that wonderful statement, Mrs. Watanabe, trading on yen, the attraction seems to have dissipated a little bit. Still, it's a favourite as far as geopolitical tensions. That US dollar's been hit hard down. It's back at that 92.5 for that US dollar index. Euro's choppy. And I think that currencies, there are other markets to play at the moment, but if you're looking at currencies, it seems to be very much centred on where that US trades in the short run.
All right, so moving forward, if we take a quick look at this chart, we've got a year-to-date performance here with the US dollar versus the yen. Look, we won't spend too much time on it, but we can see that certainly it's tracking, right?
Yeah, well, absolutely, and you know, against that basket of, well, not basket, but all those different currencies, those pairs, you've got interest rate plays, you've got the performance. Have a look how heavily it was sold off that green line all the way through there, you know, and the big rebounds that we saw from that March-April period. We've seen that continued sell-off as far as US dollar. It's been a great trade, the yen, there's no doubting that. I think it'll probably continue a little bit. Volatility and big swings, so it's an attraction to a trader.
And the key data point there is the Japanese, it's no longer the lowest yield in the world.
No, it's certainly not. The Swiss are probably, they might beat them.
Yeah, all right, in this chart here, we've got real versus nominal yield spread. I mean, talk me through it. Talk about the real yield spread between the US, Japanese and the 10-year government bonds.
Yeah, exactly. It's turned negative, and that was the issue quite simply, that as we know, it's been a race to the bottom, and that race to the bottom goes to negative interest rates. And I don't think anyone would have seen this in the 90s, let alone the 2000s, where we were. And is there further softness? How long I spoke on the weekend to Japan. I was on a webinar. And the numbers out there are very, 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 very high, considering that it's $500 US for a test in Japan. So that's why you don't see the numbers. So what's 21 look like for Japan? Is the Olympics still going to be played or carried out, you know, I think in August or so next year? And do we see a rebound for the economy, or do we see a very massive rebound to Corona?
Well, and that's a good point. I mean, the next chart here talks speculative net positions for the yen, and we're talking about net long positions, and it looks like they're increasing.
Yeah, when you're looking at it like that, absolutely, and you know, that continuation because of the geopolitical concerns, and that yen has been a favourite. So it's just, in times of tough times, everyone flocks to the Japanese yen as a safety mechanism. They're a unique country, and we've seen that. I'm smiling to myself because the Nikkei nearly at 30-year highs. It's had a very, very strong rebound, and they're Nikkei 225. I think there's probably a little bit further push to the upside over the next couple of weeks.
Talk to me about that. Why is Japanese the go-to as a safe haven? Why is it considered a safe haven?
It always has been. It's just, I think it falls back to a fallback position.
Telco,
No, it was the second largest economy in the world, as we know. It was relatively low interest rates. I'm not saying stable governments, but you know, because the tenure of a prime minister there at one stage was only a short term, a year or a year and a half. Abe broke the rule book. I think he was there for nearly 8 years, and now Mr. Suga's there. So I just think it's obviously been that attraction from an investor, and of course what goes on from central banks and their whole policy statements, and I think the attraction to the general public and to global economies has been that safety net as far as yen. Not big volatility as far as interest rates. Didn't go from 10% to 6% to 3% or back up to 11%. It's always been very, very minuscule little movements.
And it's interesting, isn't it? Because if we talk about retail markets there's not a lot of retail activity in equity markets, for example.
No, but I think that they, from a superannuation or pension side of it, it was very heavily sold off, as we know. 39,000 in 1989, the Nikkei crashed all the way to 8,000. Now it's back at 25,000. So it still has to move up 50% to be back to where it was 31 years ago.
All right, so if we take a quick look at the next one, we're talking again US dollar versus Japan here, negative trend.
Yeah, you know, that's further downside there. We might see it snap, but you know, when you're looking at that US dollar has really come under some pressure to the downside since those lows that what we saw experienced back into March. and where we run from here, possibly even further, attraction for that yen. The uncertainties there, what's happening with Trump, what's happening with Biden. I'm not here to talk politics, but that's rumbling along here. If you're a trader, and that's what we are, we're traders, it'd be crazy for a trader not to at least have on their radar what impact a possibility of an overthrown election, or even to be pushed back. You've got to have mechanisms in place to really safeguard your investments, option strategies, or just be very mindful of it. You can't go into this blind. That's what a trader needs to have. Fundamental analysis for those big, I think, rumblings that are going along.
Big events.
Absolutely, and we're in an unknown. These are black swans. These are long tail events. No one knows whether Trump's going to be successful. We can laugh and we can say, well, Giuliani, with the makeup running down here, or the hair dye, and
that wasn't a pretty picture.
No, it wasn't, and it must have been pretty hot. We're under lights now, and it does get hot under lights. But I say this. Who knows? I don't know. No one knows whether there's been voter fraud, but it does create uncertainty to a market. And I think that's what any trader's after, is that uncertainty factor. We're going to see a reversal, let's dive in. So I think we could have some hijinks between now and January 1.
Pete, it's been another great day and a great opportunity to chat with you to explore the opportunities and the insights that come out of the data set that is the XM.com world. Thanks for being here, and look forward to chatting with you next week.
Look forward to it, Will. Thanks again, man.